Finally, I want to look at how government programs correlate this year with crop insurance. And I did put this piece out a little over a month ago regarding the Farm Bill election. And the biggest decision that producers have to make, I think, relative to the farm program this year is whether or not to buy SCO. SCO, we talked about a little bit ago. It's a county level coverage, starts at your individual protection level and goes up to 86%. So let me take a step back and kind of explain why we got to this point. But back in 2018, when the Farm Bill came out, your initial election was a 3-year election. You got to elect between PLC, which is price loss coverage, and ARC, which is area revenue protection or coverage. PLC uses these blue numbers on the left-hand side. Oh, by the way, that first election was for 3 years. Then each year, the remaining years of the Farm Bill, you got a chance to re-elect a program again. Last year, we had a chance. This year, we do as well by March 15th. If the program gets extended another year, which I think is pretty likely, we'll get to do this again next year. But PLC uses the blue numbers on the left-hand side. And at the end of the year, if the market year average price falls below these numbers, you get paid the difference times your payment yield at FSA times 85% of your base acres. Keep in mind that these programs pay you on 85% of base acres. Crop insurance covers 100% of planted acres. So the programs are what they are. They do provide some protection, but not a lot. If you sign up for PLC last year, these were the estimate or the final prices in the second column. We had corn final price $4.53, beans at $10.80, wheat's at $5.05 last year. Anybody that had a wheat base would have collected a PLC payment of 45 cents a bushel. The difference in price times your payment yield times 85% of your base acres. The year we're in right now, I guarantee we will not get PLC payments. Prices are way too high. And I'm going to go out on a limb and say in 2022, we will not get PLC payments. Average prices won't be down below these blue numbers. So PLC does not look attractive for 22. So that being the case, should I look at the ARC program? Well, ARC is going to use these red numbers, 370, 912, and 550. We take these prices times your county 5-year Olympic average yield times 86% to come up with the ARC trigger. Now, using 370 corn, that's not real attractive either, or 912 beans compared to where the market's at today. So should I consider something else? Well, I might want to consider SCO. Now, I ran this for Hamilton County, option A. You can probably figure out which is which. Option A, of course, is the ARC program because that's priced using 370. The county's 5-year Olympic average yield is 208.58 times 86%. If you sign up for the ARC program, you'd have a $664 trigger on corn. It would cost you nothing. I can go out this afternoon, sign up for the ARC program. Doesn't cost me anything. I've got a trigger on corn at 664. Or I could look at the SCO program. Remember, SCO starts at your individual level of coverage, goes up to 86%. So I ran this band from 80 to 86%. But the trigger on it would be using this year's base price for insurance times 194.1 times 86%, or would give you a trigger at $951 an acre. The cost would be $8.57. So to me, this comes into play for producers who are probably insured not at the 85% level. If you're at 80 or 75, then I think SCO provides you a much better opportunity for protection than ARC does. You pick up what, $200 and almost $300 in extra protection for $8.57 an acre. So, or that's where your trigger starts, about $300 higher. If you're at 85%, you talk to your agent at Town and Country, see if it makes sense to add 1%. Maybe it does because the price is really cheap to add 1% of coverage with SCO on top of your 85% policy versus signing up for the ARC program. But to me, this is the most important thing you have to decide relative to the program because both PLC and ARC look very unlikely to pay. So if I decide to buy SCO, then I cannot sign up for the ARC program. I would have to put my acres in PLC. If I decide not to do SCO, I'm probably going to sign up for ARC only because I know PLC won't pay. ARC probably won't either. But if you ended up in a situation like 2 years ago with the derecho storm, ARC did pay some money in some counties that year. Now, granted, the price was much lower. We weren't at 570 corn then. So if we're still up above $5, it's going to take a huge loss in bushels for ARC to pay as well. So I'll say that neither ARC or PLC is unlikely to pay, but I still think the most important decision relative to the farm program is whether or not to buy SCO. So talk to your agent first. Make sure you make that decision before you go to the FSA office and sign up. The only reason we're having the discussion this year is right here, this 570 corn price. A year ago at 458, there wasn't a big enough advantage to really get too excited about. I think most producers kept their acreage in the ARC program. The year before that, the base price on insurance was 388. So there's no way we would have paid money to basically have identical coverage. But now that we're $2 higher, this is what's made this trigger this much different, and it's given us this opportunity. Similar with soybeans. Beans are starting on the ARC program at 912. The county 5-year Olympic average yield at 56.22 at 86%. You could have a $441 trigger at no cost, or you could buy SCO, which I think is going to be higher than 1370 times 53.7 times 86%. Would give you a trigger at $633, would cost you about $6 an acre. So again, this is the most important decision relative to the farm bill. If you decide to buy SCO, you have to sign up for PLC. If you're not, then I would probably go with the ARC program. So a few points to remind of, just again, reiterating the point. If you sign up for SCO, you must go with PLC. If not, then I'm probably going to put it in the ARC program. Producers can purchase ECO from 86 to 90 or 86 to 95, no matter which program you elect. That's because ECO does not overlap with the ARC program. ARC ends at 86, ECO starts at 86. So that top band can be added no matter which program you sign up for. You can sign up for the ARC program, go buy 85% RP, and then go buy ECO to protect this top band. RP, SCO, ECO, remember these cover 100% of your planted acres. PLC and ARC cover 85% of your base acres. RP, SCO, and ECO, these all include the harvest price option. As long as you have an underlying revenue protection policy, your SCO and ECO will have the harvest price option. PLC is just price drop only. ARC does not have the harvest price option. We start with those low levels of 370 and 912. You don't get a chance to add price to those. That's what makes these programs not look very good here for 2022. One last program I do want to mention that we have available at NAU Country is forward contract insurance protection. We haven't written a lot of this in the past years, and that's because most farmers in recent years haven't wanted to be very aggressive forward sellers. This year, with prices high, this program makes some sense. What this allows you to do is this provides protection for producers that want to be very aggressive forward sellers ahead of time. You want to market a big chunk of your grain, but you're nervous about doing it. And so if something happens to where you could not meet your obligations at the grain elevator in the fall, maybe you have prevent plant, or you have another windstorm that knocks the complete crop down. And if something happens to where you can't meet your obligation at the elevator, the FCIP policy, this add-on, would pay the difference to cancel your contract. You can buy this from 50% to 70% of your APH. 70% is a little pricey. 50 to 60 is a pretty cheap addition. So, excuse me, for producers that maybe want to go sell 50% of the crop today at 570 corn, but are a little bit nervous about doing it, this would be something you'd want to look at. The cost, I think, at 50% was maybe a little over $1 an acre. At 60% might be around $3 an acre, give or take. So again, I think this is made for producers that want to be aggressive forward sellers. So if that fits you, might be something you want to check out. So coming up, we are setting the base prices for insurance right now. We'd like to see the prices stay strong through the end of the month. Wednesday, February the 9th, we will be getting USDA's crop report for this month. We'll have updated South American production, updated U.S. demand numbers as well. This Friday, I will be hosting this month's Aftermath webinar. Usually hold that the day following the USDA report each month. We talk about the previous day's report, what the numbers were, the impact on the markets, basically all the stuff we did here today on this one. The 21st, we'll have the markets closed for President's Day. The 9th and 10th of March, we'll do the report and the aftermath all over again. By the way, that aftermath webinar, if you miss it, you don't want to watch it live at 9 a.m., we do record those and post them on our YouTube page. You can go to NAU Country on YouTube and go watch any of those past webinars. Those are posted out there. The 15th of March is when we'll have our sales closing for insurance. That's also our deadline at the FSA office. And then on the 31st is one of our bigger report days of the year. We'll get the prospective plannings report, and we also have a grain stocks report that day as well. But this will be USDA's first official survey of acreage. They do surveys in the middle of March, and then they'll post those on the 31st. So it'll be a big day for the market, certainly. I do want to mention our offerings that we have through NAU Country Insurance. I do an opening bell phone call every morning after the market opens. I record that at 8:35. It's a phone blast that comes out a few minutes later. I update quickly on what happened in the markets this morning, why the markets are trading where they are. If you're interested, let us know. The market report email letter comes out in the afternoon or evening with an update on how the market's traded during the day. Again, if you want the call, the email, let your agent know. We can get you hooked up. The aftermath is the webinar that we do every month following the USDA report. I have a podcast once in a while called Kicking Up Dust. It's on Podbean, so you're welcome to subscribe to that and get notifications when we post one of those. And I usually tweet on the markets every morning after the overnight trade closes. So we've got a lot of ways to try to get information out on markets to our growers. We don't just want to help you pick a policy and that kind of thing. We also want to help you with the markets and being able to make some decisions on marketing year round. So if we can help you, please let us know. So with that, I wish everybody a great 2022. I know you've got some decisions to make over the next 45 days or so. Again, the opportunities this year, the best they've been in a long, long time, with prices the highest they've been in a long, long time. Certainly want to take advantage of those opportunities. I think we've got some great tools to do that. So I appreciate you tuning in with us, and we'll look forward to talking to you, hopefully in person very, very soon. Thank you.